Okay, welcome everybody to the Sunday night live stream. Wall Street Reporter Sunday night live stream. We have, wow, can't believe we actually have people here watching on a Sunday night right before the election. So very exciting. Okay, so what this is all about is, the reason why I'm doing this live stream is, I've gotten a lot of questions in the last couple of weeks, actually really over the last couple of months. What is the next super stock live stream all about? How do you pick these stocks? How come you didn't tell me to buy this? How come you didn't tell me when to sell this? So we're going to kind of answer all those questions. Any questions that you have, we'll definitely cover. So before we get started, really an important disclaimer. We do not make any recommendations when to buy, when to sell stocks. These are not stock picks. So you get all the credit, all the risk for anything you do here. The companies that we feature on our live streams do pay us. So we have all disclaimers on our site, links on the YouTube thing. They pay us to get their story in front of investor audiences, and that's one of the reasons why we've had so many success stories. And again, all the stocks that we feature, they're all high risk stocks. These are not for widows and orphans, as they say. So these are high risk stocks for speculators. These are stocks which, again, 10x to 100x upside potential. So these are not the T-bills. If you want safe stocks, this is not for you. So let's kind of get right into it. So in the next couple of minutes, we're going to talk about the following things. What exactly is a super stock? What's our criteria for finding these super stocks? What is this kind of secret formula? How come, you've had so many 10 baggers, triple digit winners, etc.? How to know, this is very important, how to know when to buy, sell these stocks. When should you cash in, take your profits? When should you take losses? And then we'll open up for questions, live chat, all that good stuff. Yes, we're gonna have the PKK interview Wednesday. Okay, CloudMD, we'll talk about that. So let's kind of first get into. Let me see if I can get these slides pulled up here. Okay, so let's kind of go through sort of what we've been doing in the last couple of months. Some of you guys have seen these already. So look. Cytodyne is a stock. We first featured this at 50 cents. Last August 2019. So 12 months ago, 15 months ago, the stock went up to about $10. So it was 20x, 2,000% increase. Of course, we've had Nextech, another stock that debuted the same time as Cytodyne. Very similar in many aspects. The companies, again, they start off small audiences. The audience has increased, and that stock went from 50 cents to, 7 and change US. So 1,300+%. We've had, of course, Imagine AR from 2 cents to 36 cents, whatever the number was. It was a crazy run. Now, if you've noticed all these charts, these things have all gone parabolic at some point in time, which is kind of interesting. Also, Logic. This one is still kind of, I believe, in the early stages, but we've already had a pretty good return with that. It's up 200% since they debuted this July, so just about 3 months ago. At $4, hit a high about, I think, $11, $10. CloudMD, one of our big recent winners, stock debuted at 42 cents, and this has been a 5x, 521% increase, subsequent high. Maybe we'll talk about this stock later, but yeah, this is, again, one of these stocks that has a lot of exciting things going on. This meets really all our criteria for that next super stock. So, and we're going to explain that. Here is Apia Energy. This is kind of one of our other stocks, which is kind of on our Discovery Day live stream. It's a little bit different than the next super stock. I'll kind of explain that. So that one, again, that was debuted at 14 cents. It had a high of about 40 cents. Just in a matter of 2 months. Here's actually a stock that is debuted with us in March, and this was actually in February, excuse me. This was an over-the-counter stock. It was called Face Bank, and it just recently, they worked with us for a couple of months, and then they did the merger with Fubo, and Fubo, they weren't sure what they're doing. Anyway, they ended up going on the New York Stock Exchange. So this is one of our first real major uplistings. Went from OTC to the NYSE. Stock symbols FUBO. Now it's getting some interest. So let's talk about what is the criteria for the stocks that we do. Every company that we put onto the next Superstock live stream, we're looking for stocks that can go from 10x to 100x upside within 2 years, really 18 months, 2 years. That's really what we're looking for. So that's 10x to 100x. At a minimum, we're looking for a stock that's going to double within 90 days. So right out of the gate, the stocks, what I've noticed is the stocks that do well, the ones that actually become these kind of 10 baggers, they start moving pretty much right away. They might kind of have a slow start out of the gate, but they will usually be up at least 50% within the first month. Ideally, it'll be a double, and that kind of indicates that these things are getting traction. I would say almost every stock we featured actually on the program has actually I would say this: every stock we have featured has had a subsequent increase. Even some of the ones that we're not working with right now that have kind of gone down, but they've all gone up once they got onto the program. But the thing is, you want to look for something which is going to get traction right away in that first 30 days. We want something that's going to start moving, get at least a 50%, 100% return, and that's what we've seen with a lot of these. Definitely with CloudMD here, with Peak FinTech. That's another one here that somebody's asking about. That one took a little bit slower, but it definitely, I think it's close to a double right now after about 40 days. So we get a lot of calls. We're kind of really inundated with calls right now. Different CEOs, promoters, etc. That want to kind of put their companies, onto this next Superstock, platform, so to speak. They want to get exposure. Now, we only choose a very small percentage of companies, and the reason is this: there's a lot of stocks. Look, a lot of stocks have the potential to be 50%, 100%. You might even triple your money, whatever it is. We're not interested in those stocks for this particular program, okay? And again, we've worked with a lot of companies ranging from, micro caps to multi-billion-dollar New York Stock Exchange companies over the years. The next Superstock brand, that program that we have, that is specifically geared towards 10x minimum upside, ideally more, okay? So we'll kind of get into how we do this. Again, essentially what we're doing is it's really public venture capital investing, okay? We're really following a kind of a public venture capital market. So here is the criteria. Number one, we're targeting big multi-billion-dollar market opportunities. So these companies are going after big market opportunities. Two, there are key inflection points right now. So these companies might have been around for a while. They've kind of tested their model, but now they're at a point where they're ready to scale. So we want to capture them. We want to kind of bring them to you right at that inflection point where they're starting to scale, where they're going to see explosive revenue growth. They're going to see big things happening. In the case of, let's say, resource stocks or biotech, anything like that. So what I call discovery investing. So it's right at the point where they're gonna get some big results. They're gonna get maybe phase 3 FDA approvals, etc. 3, there's multiple catalysts in place, multiple drivers that can create that near-term transformational value creation. So there's multiple catalysts, which can range from multiple different things, and that's a whole another discussion. But there's got to be multiple drivers that can push that stock to be a triple in 90 days, 5x in 4 months, 10x 6 to 9 months or a year. So there's got to be a lot of new drivers. There's got to be news flow. There's got to be things happening. Number 4, this is critical. This is the big thing, which I've noticed really kind of separates, kind of the real super stocks. It's a CEO that gets it. Okay. So when it comes to creating shareholder value, because look, every CEO, every public company CEO, they all talk about, oh yeah, we're creating shareholder. We're focused on creating shareholder value. They all talk about it. They do, most of them do nothing. So what that means is, look, we want a CEO that's going to be proactive. So he's going to be out there. He's going to invest money in marketing the stock, to getting the audiences, so he gets the story out there. We're going to cover that later. Also very important, again, something which is a whole major discussion is, in the hedge fund world, they say that, they're seeking alpha, delivering alpha. So they want that, exponential return, which is not from the market. So we're looking for CEOs that are kind of delivering alpha in terms of, there's a lot of people who know how to run a company and whatever, but we're looking for those guys who can, they're opportunistic. They can look at opportunities. They can seize opportunities. They know how to pivot. Okay, because every company runs into challenges, and what we've seen is the ones who are, the winners. Those are the guys that can pivot. They can grab opportunities, and when the stock is running, they can raise capital. They can do M&A, et cetera, et cetera. They know how to take advantage of that value creation. That's very, very important. If you look at, the big winners, it doesn't matter what business the company is in. If you have a great CEO, they're going to make this a home run. A recent example is Airbnb. Okay, I think Airbnb started off with something crazy like, I think they were going to sell cereal on the internet. They had some, crazy model, which was a disaster. It was something goofy. These guys pivoted, okay, and all of a sudden they came up with, hey, we're gonna I think rent sleeping bags or whatever in a room. Anyway, what you see as Airbnb, they pivoted to that. If you go back in time, there was a company that started off with a funeral home and a parking lot. Okay, that company became Time Warner. Okay, which then merged with AOL. So had those type of things, and so it doesn't matter what business the company is in. It's what the vision of the CEO is, where they're going to take it. That's one of the reasons we focus on really bringing you those CEOs, because you kind of need to understand, are these guys for real? What's their vision? Where are they going to take the company? It's critical. It really doesn't matter what business the company is. It's like that. It really doesn't. It's where the CEO is going to take it. Number 5, I think it's very important. I have this in yellow here. Because again, we're looking for an edge, and I'm going to get into that later. We don't just want something with big potential. We don't want it's got to have an edge. So we're looking for something that's going to be undervalued out of the gate. So the stock has to be cheap compared to its peers. So if it has peers that are trading at 10x revenue, if the stock is at 2x revenue, like we have Logic or CloudMD, whatever. That's something that's something where we're looking for, because that value gap can close as the company's audience grows. So we want to start off with an edge. We're not just looking for companies which have a great story. There's got to be this kind of built-in what we call a margin of safety. Okay, so you got to have that cheap valuation, relatively speaking, cheap valuation compared to its peers. Another idea of margin of safety is, hey, what is this company worth as a private company in terms of, either in the PE or the VC market? We've had companies, they're public, but, their peers that get VC funding get valuations 5x greater. So it gives us a margin of safety. It's always good to know that. Number 6, which very important, we want companies that are riding, big trends, big waves, trend waves. I put in this word, trend waves. These are thematic tailwinds. Like, I'll give you an example right now. We have telemedicine, okay? So CloudMD is a perfect example of that. Telemedicine was taking off for, a number of, maybe a few years. It kind of really got going once the coronavirus thing kicked in. And that trend, that's a mega wave. That thing is going to be here for a while. This thing is not even, I would say it's maybe in the 3rd inning. It's a long way to go. So we're looking for companies that are they're doing fintech, they're doing whatever it is that's something that's a big theme, something that's big, like cannabis was a few years ago. And yeah, I think cannabis is going to come back very, very shortly. You can have gold. Gold is going to be a massive theme. I believe gold is going to go to $3,000, maybe even $5,000. I'm saying 5,000, but really 3,500 in maybe a year and a half. So, and I've been right on gold. We haven't done a lot of gold stocks. We will shortly, but gold is going to be a massive theme. So you want to be positioned you want to be kind of in those areas where you see a big wave of investors starting to come in. You don't want to chase it, but you kind of want to be there. You want to be like, as I think, was it Wayne Gretzky, the great hockey player? They asked him, what makes him so great? And he said, hey, I'm always where the puck is heading. So he shows up where the puck is heading, whereas everybody else chases after the puck. So we want to be, in front of these big waves. Okay. So let's go into the next one. Okay, so we're looking to play for big stakes. Okay, it's got to be, and the reason why we're focused on 10x to kind of 100x return is I really believe, look, if you're going to be playing in this kind of micro cap space, small cap space, penny stocks, what have you, companies under $1 billion market cap, you got to go for 10x, minimum 10x return. Because if you're going after stocks that double, go up 50%, 200%, you're going to lose money over time, because most of these stocks, they go down, they drop 50%. So if you have 10 stocks, 5 of them doubled, 5 of them dropped in 50% or whatever, you're going nowhere. So you got to focus on those stocks which really can be those 10 baggers, 100 baggers. And focus on them. That's kind of the VC model. You can't make money with these, chasing, 100% type returns. Like I know everybody's getting into options trading. I'm sure. Look, there's a lot of guys who do make money trading options or futures, what have you. I started off in that business, on the commodity exchange. Most people will lose because they're kind of usually going for kind of small, those small kind of stakes. We're going after big stakes here. So let's go to the most important slide here. Fat tails and asymmetric setups. Okay, so here's a quote from Peter Thiel, or Thiel. I don't know how you pronounce this guy's name. The guy's a billionaire. He's behind, PayPal, Facebook, genius. The guy's an absolutely brilliant VC, most successful guy in the space. So his quote is, the biggest secret in venture capital is that the one investment in a successful fund, so it's that one stock, is the one that's going to outperform the rest of the fund combined. So if you get that one massive winner, it's going to cover, all those kind of dog stocks that you have, those everything else. And look, in the typical VC portfolio, let's just assume it's 10 companies. 5 of them are going to go nowhere or go bust. 3 of them will do whatever. They'll get their money back, maybe a little bit. One of those is going to be a 10x, 20x. Another one will be a 5x, whatever it is. So and that's how they make their money. That's how they're able to generate 35% compounding returns. We're taking it a step further. Okay, so this is my quote here. I mean, so we're focus on stocks with 10x to 100x upside, but where the odds are stacked in your favor. Again, we want to get that edge. And so I was talking about options before. I started off as a kid in the commodity business, and there was always that expression that all the traders on the floor, they had that edge. Okay, so they had a big edge. Obviously that may have disappeared now, but that was that floor traders. So they had an edge being on the floor. They could see the order flow. So they had a massive edge compared to the public. And the more edges, the more advantages you have stacked in your favor, the bigger your returns are going to be when those home runs hit. Okay, so just so you see that curve, that is kind of that probability curve, the fat tail. Okay, so the one in the middle is this normal returns. You have those couple of stocks that are up 200%, 100%. Then you have a bunch of dogs. The one in the yellow on the side, that's where you have that 10x, 50x, 20x, whatever it is. it's that 1 out of 20, whatever it is, 1 out of 10 that becomes, that pays for everything. Okay, so what's our secret formula? So everybody's wondering, okay, how is it, what is it that we're doing? Are we selling subscriptions? We're not selling subscriptions, not yet. We're going to talk about actually a special offer. A special offer we'll get into in a little bit. Actually, let me just pop this up on the screen because I just realized we don't have our, there we go. There we go. We got to have that thing up there. I haven't done one of these by myself, so I'm not used to putting up that banner. But anyway, so here's our secret formula. We start off, we're looking for a company which has a great upside story. So it's got to have that 10x, 100x. It's got to have that blue sky potential. It's got to be something big. And then we multiply that, okay? So you take the big story, it's multiplied, but let's just use the word promotion, okay? People call it, Goldman Sachs calls it, whatever. Investment banks, they do exactly the same thing we do, but they bring around companies to fund managers. They put them into their investor conferences, and they call it non-deal roadshows. Whatever fancy words they come up with it. Institutional sponsorship. Essentially, they're promoting stocks. Okay, and that's what we're doing. We're promoting stocks through our platform to reach hundreds of thousands, millions of investors worldwide. And we have, we've been doing this like Wall Street Reporter's been around. The brand has been around since 1843. We've been around online since 1997, 98. And we've developed a very strong following. There's a lot of people who are on our email list who can take big positions at a stock once they see a story is interesting. And what happens is, you take a great story. It's great story meets great investor audience, and the stock goes up. It's just a question of what we're doing is we're helping that company get discovered. It increases demand for the stock globally, and that closes that kind of valuation gap. Because look, companies that are undiscovered, they're unknown, they become zombie stocks. Okay, so there's a lot of high potential stocks. Excuse me, let's use the word hyper potential, because high potential means 5x. Hyper potential, I would say means 10x to 100x upside. So in my opinion, the single biggest risk for a hyper potential stock is that nobody knows it exists. Okay, how many of you know companies they have a great story, and these guys are they're banging their head against the wall for years because nobody knows that these stocks exist. Nobody knows anything about them, and they stay undiscovered forever because they have basically CEOs who don't know what they're doing. They don't know how to create shareholder value in the real world. Okay, they may know how to run a business, etc., but they don't know how to create. There's a difference between a good business and a good stock. And what we need is a good business, but more importantly, we need a good stock. Actually, what? I'm going to ask by a show of hands. Okay, so if you guys want to, here's my question. Feel free to comment. Would you rather have a great company that increases revenues 100%, but the stock stays flat? Or would you rather have a company where the revenues stay flat, the profits decline 30%, but the stock increases 500%? Which do you prefer? So if you make your comments, feel free. But I think most investors, when they're buying a stock, they want a stock that's going to go up. Right? I think it was Will Rogers, a famous American actor, comedian. He said, "Hey, only buy stocks if they go up. If they don't go up, don't buy them." Whatever that means. So, even with a great story, underdiscovered stocks, and there are so many of these zombie stocks, like they have good stories, whatever. But if nobody knows they exist, it's like that tree that falls in the forest. You see that little cartoon there? If nobody hears that tree fall in the forest, what's the point? So if they don't have if these stocks don't have that retail support, investors, institutional sponsorship. Their stock, they can't access capital. They can't get deal flow. They don't get M&A opportunities. They're not going to get A-list talent with stock options. If you have a tech stock, if you have a tech company, and you want to compete with Google, with Facebook, you better have a stock that's moving, that's moving, 300, 500%. Okay, so that's what attracts talent. They want to make money. It's the I think was it Andrew Carnegie has said, the financial motive must prevail. People, are motivated to make money. That's what makes the world go around. So, if a stock is not discovered, it's going nowhere, and you want to avoid those. Okay, so next super stocks. Okay, what we do is we eliminate that zombie risk. Okay, so the companies which are on our platform do not have, they've been de-risked from being zombies. How? Because we give them this kind of massive, investor exposure. When once the company starts out with us, it's not, some people just see the live streams, but there is the live streams that we have. It's like the tip of the iceberg of the visibility that these stocks get. They get hundreds of thousands of eyeballs on them, within weeks. So and look, if you have a good story and it gets discovered by the right people, stock goes up. Simple. It's not rocket science. Okay, so what we're looking for is what I call the asymmetric setup. Okay, the next super stocks, these are kind of asymmetric setups. The reward is 10x to 100x upside. So it's a $1 stock. Let's use that as an example. It's a $1 stock that can become a $10 stock or even a $100 stock. The risk, the stock can go to zero. So, if you have 10 of those, you only need one of them to cover the whole thing, and two of them, and you're already ahead. The average risk, I would say, if you look at some of our kind of even our so-called losers over the past, those companies, and the only times companies have kind of gone down, you see those, we've had a few last year. Once kind of they stopped, they kind of dropped off the platform, they said, hey, we're going to, we don't want to promote the stock or whatever it is that they were going through. They kind of went back into obscurity. We had a company called Night Food Holdings last year. This could have been a real 10-bagger. The CEO was terrible. I mean, beyond not understanding stocks, the guy, well, I don't want to get into it, but basically, once they came on the program, the stock started moving up. I think it went up like 50%, maybe actually 50%. Actually, the first time on our program, the stock went from like 10 cents to 50 cents. Then 20, whatever. It was a big success. I don't have it in front of me, but the stock went up. They decided to go into obscurity, and sure enough, the kind of thing went nowhere. So those are the only times we've really had kind of losers. So the risk is basically, I would say the average risk is 50%, because look, if we have a stock that debuts and in the first month the stock is down 30%, it's probably 50%. If it's the stock, and we've actually never had that happen. We've never had a stock drop that much, or even, I don't think we've even had anything more than a 20% drawdown after a debut. And that was long ago. So I think at 50%, that means something is definitely wrong, and just bail. But so the upside is 10x upside. The risk is small, and here is the edge. This is very important. We have kind of this built-in the marketing program, which results in massively increased global awareness for the stock, which results in more eyeballs on a stock. It just results in more demand. Usually that results in buying. I mean, you kind of, do the math. So, that's kind of a critical thing. We start off with a great company with a great upside story. We get them that great audience. And then these things kind of develop a life of their own, like we've seen in a couple of our winners. So here's the important part, and I'll answer questions right after this. Here is rules for profits. You got to get in early. You got to be in the water like a surfer. You can't be on the beach, on the sand, when that wave comes in, start running, into the water. Now you got to be in the water, ready to catch the big wave. You can't chase stocks once they start going, up 500%, 400%. Once they start going parabolic, it's too late. That's like that's the time you want to start, taking some profits. Okay. So speaking of getting in early, I don't know how many of you guys start actually following a stock or even buying a stock, shortly, right after we announce that the company's presenting. But what I have noticed, and I'm sure you've noticed, is shortly after we announce that the company's presenting, stocks start moving up. Okay. And sometimes what happens is, look, people in our audience, they're pretty smart. They've seen a track record. Most of the time, these stocks go up right after the presentation, day of. And so they kind of front run the public. It's perfectly legal. I mean, we made the announcement. They kind of front run the rest of the people. They do their research, and, they can make 30, 50% in a couple of days. If you want to do that, I mean, you're welcome to. We have that happen all the time. Again, we're not making any recommendations here. It's not a buy-sell recommendation. Do your own research. Speaking of which, do your own research. Look, we don't make buy-sell recommendations. We introduce you to the company. We bring you the CEO. You listen to their story, see what these guys are all about, and then you decide for yourself. You do some research. You look at their filings, and then figure out, is this company have what it takes? Is this guy for real, or is this, hype? You got to kind of do your own research. Number 3, very important. You want to manage your risk. Again, we're not here to give investment advice, but the capital allocation is the key. You don't want to put all your money into one stock. That's like a formula for going broke. I mean, you want to spread your money around. You maybe want to, if you again, and these stocks, this should be part of like your speculative portfolio. This is not like your retirement portfolio, whatever. This is like a small percentage of your portfolio where you want to kind of have exposure to big opportunities. And you want to take those risks. This is perfect. But again, you want to put 10% of that, thing into one stock, 5, whatever the number is. You got to figure that out. Whatever works for you. That's a key thing. Number 4, know when to cut losses and when to cash in and take profits. Okay, a lot of times these stocks run, and people they hold on to them. Look, we're in the look. This is the speculation business. We're not here to collect stock certificates. This is a situation where if a stock goes up 10x, you want to take money off the table. You might want to leave some money in, but the odds of that stock going to 100x decreases. It's like a very small percentage will go there. But the majority of the time, the big money is made once the stock goes 10x, 15x, in that kind of range. The real money has been made. And then, of course, look, you will have that kind of small percentage of companies that, just go exponential, whatever, and they become huge. So you got to kind of decide for yourself what that is. That's kind of really the thing that separates great investors from average or bad investors. You kind of need to know when to cut losses, when to take profits. Very important. And that's it. All right, so let's open up for questions. I'm happy to answer your questions. And let's go. Yeah, here we go. Oh, yeah. By the way, so what's the point of this live stream? Actually, we're going to be doing a special membership program soon. Let me give you a little quick ad. What is this all about? We're going to be doing 2 things. One is WhatsApp notifications with a special chat group. So as soon as news comes out on a stock, as soon as a stock starts moving, that's in our group, you're going to get a notification. It's, also the great thing about WhatsApp, there's voice, video. So, you can get some commentary about what's happening, which I think could be very valuable. And again, look, if you're, playing with a decent amount of money, you might want to do that. I'm not sure how much we're going to charge yet. Let me know, by the way, what you think that's worth. The other thing is we're going to have something where we're going to have private YouTube live chats, some, extra priority on stuff. So again, these things are things which are going to give you that edge. Okay, with that said, I'm going to start answering your questions. Okay. Yes, Peak FinTech this Wednesday live stream. Check it out. This is a stock that's already doubled, and this could be, again, this has a lot of the earmarks of one of our 10 bagger potential stocks. What's the price target on CloudMD? My personal opinion, again, I got to be very careful here. My personal opinion on CloudMD is, I think this could be, I think the stock is probably going to pull back over here a little bit. There's going to be some profit taking, but I think it could easily be might go to $2 US, and then, it could go to $6 plus $7, if they kind of hit a couple things right. Again, that's a stock where, again, they have all the things going for them. They have, the big market, it's thematic. Telemedicine is just getting started, and now they're getting a lot of institutional sponsorship coming in. So that's going to help the stock. So I think that could do well. Again, not a buy-sell recommendation. They are a client. They do pay us. Make your own decision about this thing. Okay. Do we have U.S. stocks? Yeah, we have U.S. stocks. We have Logic, LGIQ, which again, I'm expecting big things from the next couple of months. It's moving now. It's already up a couple 100%. And for whatever reason, it's just we're in that phase where we have a lot of Canadian stocks. I think here's the difference between U.S. and Canadian CEOs. The Canadians, they understand the need for promoting a stock. American CEOs, they're really kind of a little bit backwards. They're just, they're like third world. It's kind of sad. Do you see CloudMD? Yeah, I just mentioned the cloud. It's probably, look, I think cloud is probably gonna have a pullback. Some of these stocks are gonna have, because look, the stock went from 40 cents to 2 and change, straight up almost. It's going to probably have a pullback. But then, in my opinion, again, this is my opinion, nothing to do with the company, whatever. I think the stock is going to do well. And Visby, I think he's talking about. I think Visby also has very good potential. I don't know what this means. Wall Street Reporter was founded 1843. Go to our website, and on our Twitter, you see that banner. That's the original newspaper started by Edward McIntyre, I believe his name was. 1843, the first financial newspaper in the United States. And if you look at our designed Wall Street Journal, the Wall Street Journal started in I believe 92 or 90 or something. So, we're about 50 years before them. What's your forecast for next tech? I don't know. We all want to stock. How is I guess you missed my point. My point is that, we covered it. I think okay. Let's see here. Great. Which stock since 1843 have you been most excited about? Wow, that's a great question. We have a few. Right now, my personal opinion, well, I don't want to, I'll talk about this in our member live chat. Okay, that's why you're going to want to join. You sold half your doc to buy PKK. Look, that's sometimes what happens. Sometimes you got to, it's kind of the risk. Sometimes you sell a stock, and that stock, it's one of these things. It's difficult. It's if you have a couple of these, you don't know which one is going to do well, and there's a limited amount of money. And what you definitely don't want to do is you do not want to use margin for this. Yes, I have been picking super stocks. Not picking. We've been featuring super stocks. Trump 2020. Is Trump going to win? What's your opinion? I think there's a lot of Trump voters who are saying they're voting for Biden. It's going to be interesting. Great question, Manatee. Let me take a drink. Is institutional money? I would say in most of the cases that we have, the institution that didn't kick in when they went 10x, but in some cases that is the thing, and that's kind of that's like for example, CloudMD. That stock is getting institutional money coming in, even though it's like a low price stock. In Canada, that's not a problem. Their last offering was oversubscribed. I mean, it was huge. And that was mostly institutions. So I think that's going to have a lot of institutional support. But it doesn't really need that support to go to 10x. I don't believe so. Are we announcing the next super stock? That's going to be an member problem. Question for PKK. You're going to have to ask PKK. You're going to have to ask them on Wednesday. Okay. Wow, great question here. Which CEO have you been most impressed with? Recently, I think the two guys who have done the best job, in terms of some of the things we discussed, bringing value to the stock, seizing opportunities, would be Evan at Nextech, because if you look what happened, when the stock was running, he took full advantage of it with M&A, with raising capital, and CloudMD. The company again, they are raising capital, doing M&A, and my opinion is this: why is the stock price important? This is the thing nobody talks about. The stock price is often the tail that wags the dog, okay? Because if you have a stock that's moving up, all of a sudden your market value goes from, 25 million to 300 million. That's $300 million of capital essentially you could use. All of a sudden your value, you could do acquisitions, you could raise capital, and that transforms the business. Okay, so if you have a stock that's flat going nowhere, you're stuck. But if you're able to take advantage of that high rising stock price, that thing that's going parabolic, and do deals, raise capital, that capital is going to transform your business. And we're seeing that in these two examples. So I don't know. That's kind of this is more of an analytical question. I kind of look at these, to be honest, more of a shallow perspective. I don't get into deep in the numbers, because in these, I really don't believe the numbers mean anything at this point. It's really a story. Although cloud, they're getting into that point where the numbers, you got analysts and all that. Let's see here, Target. Again, I think peak could be a 10 bagger. Why not? It's already a double. We wouldn't have it on the program if I didn't think it was a 10 bagger. If it goes up listing, my opinion is, I think in the case of cloud, it would definitely help them if they get there, or I should say when they get to uplist. I don't think uplisting automatically improves the stock. If you look at Fubo, which we had, let me pull it up here. In the case of Fubo, yeah, so Fubo was like, they were $10 when they were doing our thing on the OTC. Their New York Stock Exchange, and the stock was still, $10, $11. I think it's 13 now. and that thing's been trading millions of shares. So there's a lot of eyeballs on the stock. The big board listing helps in terms of their liquidity, but that, potential buying demand. But a stock is not going to go up automatically just because it uplists. So as you can see with Fubo, no, we are the Wall Street Reporter, 1843. Wow, that's interesting. I'm not a doctor. I think I'm the wrong guy to ask. But I think definitely if you're feeling good, you perform better, right? I don't know. Good food. I don't know what this is. Beyond. I think we're going to have Dr. Hamza this week. I don't have any opinion on I just, we're only talking about, the stocks that are in our thing here. What's up? Okay. It's an interesting question. I don't want to speak for the company. Again, this is just like my opinion. My opinion is that cloud, I think they're kind of, that telemedicine space, there's going to be a lot of things happening. I think that company is going to get my opinion is they're going to get bought out in, within 18 months at a high price, much higher than that's my, it just, again, there's not from the company, nothing to do with this, just my thing. Is Nextech? We're not working with Nextech, so we're not talking. Again, this Nextech is not in our coverage universe right now. So, Logic, yeah, I am a big believer in Logic. I think this is a stock that could be easily a 10 bagger. Chris, how do I pronounce your name? Lacourcier. I'm sorry if I'm butchering your name. So anybody interested in Logic, go to Seeking Alpha. Type in, punch in LGIQ. Take a look at Chris's report. This guy knows what he's talking about. I think that they just need to get their story, out there, because it really. That nobody knows about the stock right now. Well, I should say, look, a few more people know about it since we started, back 3 months ago. But we haven't scratched the tip of the iceberg, really. Like, this Logic is a stock that we haven't even gotten started with, and what is it? It's a triple, or it's up 200 plus X. I think that could be a big winner the coming year. Hey, Michael. Okay, so no, this is okay. No, I am thinking of doing just a special subscription product, which is just going to be for, like, if you want to get like the WhatsApp alerts, you want to get like a kind of a special live chat, which is kind of like off the record, so to speak, or whatever. That's kind of would be a premium product. Everything else is free, because look, our whole approach revolves around giving companies massive exposure. So you'll have free access. Everything is going to be free. Everything is going to be, I don't know. I mean, that's a whole different. These are really two different animals. But I think cloud could do well. Why the fallout with Sheldon? Should we say? Yeah, I'll just say, yeah, Sheldon. Basically, I don't know, the guy. I'll tell you exactly what happened. He hired us to get more exposure for his stock, and the U.S. side, the U.S. volume on the OTC. Started moving up. The Canadian shares are moving up, and as the shares are moving up, the guy's texting me saying he's disappointed that it's not moving up enough. I mean, this thing like doubled. I don't, the guy, this is a strange dude. So I was like, I can't deal with this. You gotta you go somewhere else. I don't need to have this kind of nonsense. And then I find out, I don't know, if this guy's selling. people, like the guy has kind of a, a reputation for, let's just say, selling shares. But otherwise, than that, I think he's as a person, I like him. He's a cool guy. I have no opinion on, stock. I can't say buy, sell. We stopped working with Nasdaq last week. We just, we worked with them for about a year and a half. Our contract simply was up, and we just couldn't come to terms, mostly for a number of reasons, financial terms, et cetera, a couple of things in terms of, we also want to give, that stock has done so well. At this point, we're looking for, again, something right now that could be a 10 bagger from where it is right now. And we have a bunch of stocks right now that are, they have a very good asymmetric setup, like we're talking about. Like we have a couple of stocks that, could be 10 baggers, and they're just getting started. So I want to focus on new stuff right now. And to be honest with you, this thing is really, it's an entertainment platform, okay? People, they watch these live streams, they follow our stuff because, they're looking for action, okay? They want stocks that are going to go from a nickel to $1, okay? We have that right now with a few things or whatever, 10 cents to $1, from, 50 cents to $5 to $10. Once a stock is, $7 or whatever it is, the odds of it going to 70 is small, and it's a whole nother job. It becomes a different animal. Okay, Chris. Yeah. Okay. So just any. I don't think this link is clickable, but if it is, click on it or go to Seeking Alpha. Check out LGIQ, Chris's report. Could be. Yeah. I always. What company? Sheldon. Look it up. I'm not here to give him promotion. Dinosaur. Yeah, Dinosaur. Dinosaur. We got. I think with Dinosaur, what's kind of missing is they kind of need to be on the platform more often. They do need to maybe get a little bit of traction in their business. That stock is a big market cap, so we're kind of coming into that stock. I don't want to say late, but it's a little bit more mature. So that's something which is a little bit, it's gonna be a little bit more of a long-term deal. But yeah, they gotta basically just be out there a little bit more on our program, and we'll see. Okay, top 2 stock cloud. Yeah, I think we have a few stocks. We'll talk about that later. But yeah, I think actually, no, I should say blue sky potential. No, okay. So blue sky potential, in my opinion, here's the thing. Okay, so we say 10x to 100x. The 100x, that's that blue sky potential. I think with the times when you do really get that, and again, anybody feel free to give me your kind of take, is when you have a monster kind of discovery, when you have some sort of resource, gold discovery, whatever, metals, oil, FDA approvals, biotech stuff, where it's something blue sky and people can't really kind of model the revenue. So, the stock can go to whatever. A mining stock, if they say they have gold and it's a massive discovery, that stock can go 100x. Until the geologists start falling out of helicopters. So, yeah. So that's those are the cases. In terms of companies which have revenues, it's more difficult. They could definitely go 20x. That 100x is tough, because that's who did 100x? That's Amazon, Apple, maybe. It's a difficult, because it's a different animal. Benny, thank you. I'm happy to answer your question. We'll try to be transparent here. I like Empowered. Again, this is one of the stocks we're going to have on, I think, in the next week or two, where they've been kind of delayed with, they got to get some things lined up. I'm bullish on it. Again, this is a company which, my opinion, again, nothing to do with the company. It's not their official. my opinion is that this thing could easily be a 10 bagger. I mean, the stock is what, a nickel, Canadian nickel. So that's like what, a penny in US? No, it's a stock is whatever. So it's a nickel stock. It could easily be a 10 bagger as they get traction. This is a company with revenues. It's a very interesting story. I'm looking forward to kind of getting them on a regular basis. I think that's a very interesting company. PMed, we are not working with PMed. That's kind of one of the companies that kind of dropped off they dropped off our platform. It was kind of brought to me by some guys, and it looked very interesting. I definitely think they have an interesting concept. They didn't quite start getting traction, and to be very candid with you, what happened was once we signed Sheldon onto our platform, PMed, Sheldon is a controversial guy. It was one of the issues we had. The guys at PMed basically, I think the CEO of PMed had some issue with him, and he said, "Hey, if you have Sheldon, then we can't do anything with you because whatever." And I said, "Hey, okay, you want to leave? Goodbye, whatever." I'm not, So they kind of dropped off, and we haven't heard of them. Xfido, I don't know what's happening with Xfido. Again, we got to get that guy on. I mean, it's the CEO has got to get onto our program. We got to get some news. That's one of the things that is critical. The stocks that do well on our platform, the CEOs show up. I mean, the guys show up when there's good news, when there's bad news. I'll give you another example. Somebody asked me about which CEO was most impressive. Hang on a second. Let me pull this up here. Which CEO did I find most impressive? One guy I forgot to put in it was Nader at what do you call it? At Cytodyne. I mean, the guy was a great promoter, in my opinion. Let's pull up that stock. He definitely did all the right things. That company, it had all that 10 bagger kind of stuff, and we were working with him for quite a while when the stock was 50 cents and went to $10, and he was a great promoter. And here's the point I was going to say. Any CEO can go on our program when they have great news. Anybody can do that, okay? The guy, what separates the champions from the also-rans, the kind of wannabes, is when they have bad news, when the shorts are coming out against them, when they have whatever's coming out against them, they show up. So Nader was showing up on our program all the time. When they had bad news, good news, whatever it was, he was very, very transparent. So that was a one of the key things. And again, that is very important. Let me go into, okay. So let's go. Next question. AR industry. Hang on, let me pop up this thing, because this is right. Okay, I'm gonna have to put this over here. So okay. Okay, so I think the AR, we called it a theme. I'm thinking, I don't think AR is really a theme now. I mean, I know we're talking about it. It's kind of like I'm looking at AR as just like a feature. I know that when Apple Glass comes out, it's gonna. But AR, if you look at it, it's used. Snapchat is using AR. I mean, it's used in so many different. Amazon is. It's more of like it's something like I don't know, whatever you have on your screen. It's kind of like a feature. I'm sorry, I'm not able to articulate it properly. But telemedicine, I would say, is a theme. That's an industry. AR is really not a theme, because if you look at it, stocks. I mean, all these stocks that are moving now, like Snapchat, etc., and they do use AR in a big way. It's not the thing that's driving them. So it's the other stuff. So they gotta monetize whatever else they're doing. This stock, I'll be honest with you, Mohammed. I think this is again I think this thing could be a winner. This thing has really kind of gone nowhere so far. I don't know what's happening. It seems like we put them on the program and the thing pops and then selling comes in. I don't know if it was guys from the previous thing, whatever. But yeah, this is I don't know what's going on. But yeah, this is going to take a little bit of a while. This is not currently our it's not a momentum stock. I'll put it to you that way. But they have some great things happening. If you looked at their last live stream, they are, that thing, their revenues could go exponential right now, because if you look at their, they have 3 games now. They're going to be launching, I believe 10 or 12. Each game can make like 500 grand per, online casino. Each aggregator has multiple. So, these guys could have a lot of revenues in the next 12 months. We're going to have to watch this thing but yeah, and also nothing goes in a straight line. Like I think, here we go. Example, I think a lot of people were kind of pissed at, Imagine AR, like, because they said, hey, we're going to have news, this, that. Nothing happens in a straight line. It's a business. I mean, sometimes things take longer. It's it's in the real world, things are just, dynamic. So again, fans unite. You're gonna have to watch this over the next year. Yeah, we're working with Empower. They're going to be on the next probably week or so. We're just waiting for them to finish their slide deck. I want to see a slide deck. It's important. Yeah. So AR, I think I mentioned this before. I think AR. I think this is what, like, whether it's Imagine, Nextech, whatever. It's not so much AR. The AR is like the thing, but it's really, I'm not able to articulate it, but basically what Imagine AR, I believe, again, I'm not speaking for the company, they're selling, fan engagement, retail engagement, and that happens to use this technology, whatever it is, but it's not, it's so they could do whatever. It's not, they're not limited to AR or what have you. But I think when Apple Glass comes out, there's definitely going to be some buzz. Yeah, I was actually surprised when I saw that comment about Sheldon being involved with Peak. I do have to say, look, if you look, the guy did well with Imagine AR. He got in at what, 2 cents. He sold at 35. Yeah, I know people are saying he took a lot of heat. People are saying, oh, the guy's dumping the stock. He's pumping up. I mean, what do you expect him to do? He's an investor. If he buys a stock at 2 cents or runs to 35, 40 cents, he has to sell the stock because he's got to roll that money into the next deal. And I think that's what people need to understand. This is what whether it's Sheldon, whatever it is, you got to kind of, the money is made by compounding. Okay, you want to make 10x, parlay that into the next 10x deal. You kind of turnover. What do they say? Racks on racks, as the I believe that's what that is about, right? Racks on racks. The lyrics in that song. I think it's about compounding. Yeah. Logic. Dinosaur. Now I think Dinosaur is actually in the right place at the right time. I think they're being kind of overshadowed by these electric e-vehicles, these Nikolas or whatever, these which I think are BS. A lot of these things they actually have Dinosaur. I believe their application. Again, I'm not an engineer, but I believe that their thing it could be a huge business. Plus that carbon credit, the recurring revenue side, which is massive. Look at who put money into this. Eric Sprott. Eric Sprott is not a stupid guy. I mean, he is a very successful investor. I'm not a tech guy. I'm not really, I don't know if anybody has a comment on that. This is kind of outside of this is beyond my pay grade, so to speak. I don't know. buy before the Neo NYSE. Interesting. Okay. Yeah. So I think so. Logic is they're going to go on. The idea there is a stock is going to go on the Neo exchange, which is kind of that institutional market in Canada, and from there they're going to get the kind of brought over to the NYSE. That's kind of this kind of interesting strategy. So I think that stock could definitely get more eyeballs once it's there, and we're going to find out if there's going to be some some other things happening. This is a great question, Roland. Now, I don't know. It's basically we don't say buy, sell, hold. That's not what we do here. But I would say these are not stocks which you want to hold for 5 years. I mean, you're just not going to. They're either going to pop or these are generally speaking, these things are going to be 10x stocks, and you get out, you go on to the next thing. After that, I don't know, they might, out of those stocks that go 10x, 1 out of 10 or 1 out of 5, I don't know what the number is, maybe it's higher, could end up being like a Facebook. You never know. If I knew, I wouldn't be doing this for free. I don't know. Look, I think these are like, I was having a conversation with somebody and I said, look, these things are kind of like, I'll use an example later, but yeah, basically you don't want to, these are not like long-term investments. I mean, this is speculation. Okay. It's high risk, high reward speculation. Is joining Nasdaq a big deal? I think, I think Nasdaq, NYSE, it just, opens up. All it does really is it just gives you the opportunity to attract more eyeballs. It's an opportunity. It gets your foot in the door. It doesn't mean that all of a sudden the stock is going to go to 10x. If you look at Nasdaq, there's I don't know how many thousands of companies. There's thousands of zombie stocks on Nasdaq that are going nowhere. I mean, I got a call the other day from a guy with a Nasdaq stock that's a zombie stock. It's a gaming company, and the stock is he's on Nasdaq. This guy's going nowhere. It's just a foot in the door. Online gaming, I think, is going to be huge. Esports, sports betting, these are big themes. Again, this kind of like talking about big themes. Telemedicine, sports betting is a big theme. Gaming is a big theme. So it's so that's why I think fans is in the right place. Again, it's kind of like I can't make I'm not making recommendations. I'm saying, we kind of said what it was before, but yeah, these are Icanic. Yes, so Icanic, this is a company that debuted on our live stream this week, and we're going to have them on, I believe. I'm waiting for them to get their slide deck ready, because that's kind of the next step that we're doing, and I think it might be this week and next week. It's kind of up to them. And Cannabis, I think, is right now getting ready to make a run. Again, Cannabis is that big theme. Had that huge kind of run up a couple of years back. The great thing, what I like about the Cannabis personally, is you have kind of this built-in kind of audience right now of people who love cannabis stocks. It's like you have people who love gold stocks. So, gold bugs. Okay. So they look for any reason to buy. And Cannabis is kind of one of those things. So you have a built-in audience of people who know what the theme is. And once these things start moving, it's going to be big. I don't know Pen Game. They're not on our program. So yeah, so Peak, I mentioned Peak. I think this company has a good upside. Again, let me just kind of wrap up saying again, anything I said is my opinion. I'm not saying buy, sell, hold. These stocks are higher risk. They can go to zero. It's you got to do your research. We do not make recommendations here. These companies are clients. We are getting paid by the companies. So this is not like a purely independent opinion. So, you got to, so here we go. Cannabis, yeah, definitely. Cannabis, I think is, personally, I never understood pot. I smoked a couple of times. I didn't get high, so I doesn't do anything for me. But apparently, look. I mean, it's a great thing, and people, the CBD, cannabis. There's all sorts of uses, and also for recreational. I'm more of a cigar guy, but yeah. So the cannabis thing, I think once a couple of these cannabis guys start showing revenues, it's going to get a lot of people back into that space. What is that? I don't know the stock. So that's it. Last thoughts. Okay, so I want to kind of lead off with this, which is we're going to be launching this kind of program soon, this membership program, which is just about what it will do for you is it'll give you kind of updates, real-time updates, notifications on WhatsApp. Okay, so as soon as we sign up a new client, you'll get a notification. When we drop clients, you'll get notifications. So you'll basically know that, hey, when is the stock ready to start moving? You'll get notifications when news comes out, and you'll kind of get commentary. We'll add some color. So you'll get an alert, you'll get like a little video on your WhatsApp, and we'll say, hey, here's what this thing really means. Here's what this news really means, and here's why you should pay attention to it. And that part is opinion. That's opinion, nothing to do with the company. It's just, opinion here. And what else will you get? There's going to be some private members only live chat and live streams. A couple of things we're going to be doing, which are going to be pretty interesting. And that's it. Yeah. So Dwight, you're welcome. Thank you. I appreciate you coming on to the live stream at so late at night. I don't know where you are. Maybe you're in California. Maybe you're in Hawaii. It's only 2:00. Thank you. Yeah. So yeah, thank you for joining 001. Gunblade 72. You're welcome. Thank you. Great questions, and Sheldon and so thank you. You are awesome. I'm just a guy here on a live stream. So, all right, guys, thank you again. I'll see you in the next live stream. And again, remember, play for big stakes, manage your capital correctly, and make a lot of money. Go for big stakes, 10x, 100x.